Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday. It's the 12th of June 2015. Let's look at this market, and first we'll take a look at the numbers. The S&P 500 gained just a slight amount this week, whereas the Nasdaq was dragged down a little bit by the semiconductors, and the worst group for the week was the biotechs. But looking at again the year-to-date performance of the biotechs, it was just a blip, and we did close at an all-time high in that group on Thursday. So let's take a look at the charts and make some sense of it. I wanted to start out with this weekly chart to emphasize the point that we are still currently in a longer term uptrend. On this weekly time frame, we have a pattern of higher highs and higher lows above a rising moving, all of these rising moving averages. So the uptrend is still intact, and as I say, we're innocent till proven guilty. It doesn't mean you just buy blindly at any point in the uptrend. This is the bigger trend line that represents the essence of trend. If we were to get a pullback just to the trend line, that would bring us back to a prior key level of resistance and support. That's down at 200 basically, and on a percentage basis, that's less than 5%. So it's not really wouldn't account for a big pullback 5% from here, and I'm not even suggesting we are due for that pullback. When we look at the daily time frame, we see that this market still remains a mess. The year-to-date trend line was broken earlier in the week, and we recovered from that, but then obviously pulled back here today. So we're seeing a lot of indecision. The good news about a choppy market is there's still a lot of great opportunities in individual names, and if you focus on risk management in the individual names, that's where you should be looking, rather than trying to pick every move and try to pick a top in the S&P 500. The S&P 500 has been very choppy and difficult this year if you're trading and looking at these daily charts. When you look at shorter term time frames, it makes a little more sense, but it's still a mess. We had this big rally this week. It got a little bit extended, and what I was looking for and hoping we would see would be that we would pull back down towards this level and then hold. It's kind of tough to say if we are going to hold in here. I would say that next week a key level will be probably about 209 and a quarter. If we break below that, then we look at this with a little bit more of an eye of suspicion as that trend line comes back into play, and perhaps we would come down towards the year-to-date volume weighted average price at about 207.5. We came very close to that obviously this week, but again, this market is just a big choppy mess. But with good individual stocks, that's what your focus should be on, is trading the individual names. You don't have to trade the S&P 500 to be a good trader. You can look at the individual names, and again, there's a lot of great ones out there. We had great trades in Taser this week. We had a great trade in Mobileye, which we're still in. There are still some real good setups, and that's the focus each and every day. You don't have to be a master of the market. You have to be a master of risk management in whatever you choose to trade. If you trade to choose the S&P 500 or the Qs, they're good guideposts for what the rest of the market is doing, but you don't have to trade those to be successful in the market. The Nasdaq came down to its trend line for the year as well. When we look at a year-to-date price action, we can see that this is kind of what I view as the trend area, the trend line area. If we take each of these two lows, and a 38.2% retracement brings it down to 106.69, and the volume weighted average price year to date brings it into this prior consolidation area of 106. So looking at the weekly time frame here, there is no evidence of a top in this market. You'll see some people will say, hey, that's a double top. Well, they said that over here, they said that over here, they say it all over the place, but the fact is we're still in an uptrend. We're innocent till proven guilty. The market has gotten a little bit more non-directional, but that doesn't mean it has to break down from here. It's possible that this is distribution that leads to a bigger decline, but there won't be any real damage done to this market until we're well below 104 or so. So obviously you maintain a strong level of defense always and are selective in your buys. You don't want to be chasing moves, but you have to be more selective and do more anticipation, and that's what we talk about all the time, is knowing when to anticipate versus participate. The Russell 2000 closed maybe on a weekly basis at an all-time high. I'm not really sure about that, but we're still clearly in an uptrend, and this week we saw some constructive action that this Russell 2000 broke this prior little band of resistance, and we held above it as support here today. So with the Russell 2000 close to all-time highs, above a rising 5-day moving average, it's hard to be bearish on the overall market when this represents the price action of 2,000 individual stocks, mid-cap stocks, but still, they're still showing us that there is health in this market. And remember that the Russell 2000 is what's been the leader of this bull market. Year to date, our trend line in here, we're well above, and we've got a bigger level band of consolidation under here, which should provide support if we do fail from these immediate levels. But there's zero evidence that the market is topping out. Now, the semiconductors, as we know, last week had a tough week as they gave back all of those gains after the we had some consolidation in the industry, and that really got these semiconductors ramping. This week we pulled back a little bit further, and I think that the semiconductors are basically in a void in here. They had gone out to multiple year highs, and what do we have? Do we have evidence of a top? I still see a pattern of higher highs and higher lows above rising moving averages on the longer term time frame. On the daily time frame, we're seeing a lot of indecision after this pullback and the crossing moving averages. To me, it just means avoid the semiconductors. There's no real advantage to being involved in them right now, whereas the financials are breaking out to new highs that we haven't seen since 2008. So the financials have been strong. They continue to hold up. Today they held up nicely. For the week, again, we saw that the financials gained 1.01%. So a strong move in the financials, and it's tough to be bearish about the overall market when the financials are still holding up. 24.90 to 24.95 is our key little band of support we'd like to see hold early next week. That's also where we have this 5-day moving average. If we continue to hold above there, I don't see any reason why it shouldn't go on to continue on to new highs here. The shares of Apple lost ground this week, and ever since this stock has been in the Dow Jones, it's basically done nothing. Since their iWatch came out, it's basically done nothing. The stock has really kind of been dead money in here unless you're a super active trader. A lot of people were talking about that cup and handle. Obviously, that failed to materialize, and we saw that with this declining 5-day moving average. We've been talking about it as guilty till proven innocent. I always say that it's more important the direction of the intermediate term moving average, that is the 5-day moving average, than it is a close above it. So what we were looking for is a potential that we saw some support in here. This is what we wanted to see hold as support today. If this held as support, it would have made the case for a potential turn higher. But instead, we broke lower, so there's still no reason to be involved in Apple if you haven't already owned it for a long period of time. There's just no reason to be a buyer. At the same time, there's no reason to be bearish. The stock, it's holding up. It's digesting its gains through price. Maybe we come down towards the low end of the range and near that volume-weighted average price year-to-date at 124. The path of least resistance in the intermediate term is lower in Apple, so keep that in mind. Some stocks, well, let's take a look, at bonds. I wanted to take a look there. The bonds, of course, continue to get slaughtered here. This week, actually, they were up a little bit. They've come down to the 2/3 retracement. We also spoke of the volume-weighted average price from the January low where this move began, and we broke below that a week and a half ago, and now we've rallied up a little bit this past week, but we're still in a downtrend. We're guilty till proven innocent. To try to pick the bottom is really, in my mind, a fruitless event. We see that in stocks like lumber liquidators that get, these are garbage companies. This is a terrible stock to own. There are severe problems. Otherwise, it wouldn't have this price action, and to chase every little rumor just doesn't make sense. Just like in Twitter, we saw the stock up 6 cents. Last night, it traded over $40 a share. It's just a broken stock. There is no reason to think that these little blips will be anything more than a blip, similar to blips in BlackBerry every time they get a rumor of a takeover. If you're trading based on news rather than price, make sure at least you have the foresight to have a plan to get out of these positions if you're going to be chasing them based on news and emotional reactions. I pointed out on Stock Twits this week the shares of Boyd Gaming, that they look like they could be headed for a nice longer term long-term uptrend. They're in a stage 2 uptrend, and they broke resistance of the last 5 years. And, again, go back to some of these phrases that I repeat all the time. If they don't scare you out in these stocks on the way down, they'll often wear you out. Forget about these garbage names that blow up. Leave them alone, let them settle out, and now, years later, it looks like Boyd Gaming might be ready to be on the verge of a bigger move. So if I had mentioned it right here before it got going, I would say for most people, a stop maybe below this level. If you were looking at it and thinking, hey, this is an investment idea for me, maybe you have your stop somewhere underneath that 50-day moving average. It's still only $1 away or so from current prices, but I don't tell people how to trade or what they should be doing. I say, here's an idea, make it your own idea based on your individual time frame. And I mentioned stocks like this one in public forums, but we have a lot of stocks that we trade. We're in JD right now from over in here, and then we've got other setups that look decent. If you're into bigger blue chip type names, perhaps shares of General Dynamics are getting ready to go. If General Dynamics can clear this little resistance in here, then I think with a stop probably near 140, maybe that's a good idea if that's the type of stock that suits your personality. But this was clearly a pretty good shakeout, and if it was to break below that, then I think that we would see a bigger move lower. Now being on the verge of a breakout, it looks like something worth watching. Oracle's a stock that I've never had any luck trading, but it's been kind of consolidating in a tight range with higher lows, and perhaps this one's getting ready to go. I think it's probably got to clear this bigger band of resistance up here, but it's something worth keeping an eye on, as would be Under Armour. Under Armour is clearly in this massive uptrend. The daily time frame, we saw a week and a half ago that it broke out. It's been holding on to those gains rather well, and probably needs to clear this recent resistance up above the highs of the last week, beyond 82 or so, and above that, I think the stock looks poised to be able to continue higher. If we break down, you want to look at weak stocks like Western Digital that are now below their 10, 20, 30, 40 week moving average, which again is of course the 50, 100, 150, and 200 day. And if you look at the pattern in here, we're having a problem that the rallies, it gaps up. And this is a problem with short sales, by the way, is that a stock in a downtrend will experience these massive rallies in quick periods of time. Those rallies are typically sucker rallies, and I think that perhaps breaking this past week's low with a stop up around this area, that it could be the potential candidate for a bigger breakdown. But again, shorting is very difficult, I think, especially in a bull market like we are. But this is a type of stock that's looking like maybe it's peaking out. If you're not familiar with these concepts, then take a free week trial to Alpha Trends, and we talk about these educational concepts every single day. Hope you had a good week of trading, and I'll talk to you next week. Thanks.